My name is Ilana Hubert-Katz. I'm the Director of Coaching and Business Development at Keller Williams Legacy. And I'm so excited to be teaching tonight's class. And thank you. I'm seeing people put cameras on. I love that. It's so engaging. For anybody joining Zoom, if you can put your camera on, again, you could totally be hanging out in your PJs. It's 6 o'clock at night. You could have your dogs, cats, kids around you. It just makes it more fun. So, hey, I love it. People are just popping in left and right. While people are popping in left and right, for those of you who've been attending Ignite regularly, I would love to kick it off. By the way, sound check. Can everybody hear me? Awesome. I would love to kick it off with somebody sharing something that they're grateful for so far in their new learning journey specifically. So something you've learned that you are grateful for throughout your learning journey through Ignite. Just, on Zoom, there's a few ways to participate. One, you can throw your hand up. Oh, Carol, I see you. Yeah, I'm coming to you first. I hope, by the way, if I pronounce your name wrong, please correct me. And is that Donna I see? Hi, Donna. Donna and I go way back. Oh my God.
I know. I'm back.
Hold on. So a few things on Zoom. One, there is in the very bottom where it says reactions button where you can click raise hand. So that way I can call on you and it makes it a lot easier than everybody just trying to talk all over each other. Another thing you can do is you can react to things. It makes it more engaging. So down to the reaction, there's hearts. Like I'm going to heart Donna right now. I love you. I love seeing her on this. So just a few Zoom things that you can do just to, again, engage a little more with everybody on here. All right. So I asked the question, and Carol, you raised your hand first.
Hello, everyone. One of the best things that I've learned in all the classes was, I think his name was Brandon. He did the just taking our money and moving it here, moving it there, doing, all the things we're supposed to do with it. That class was so beneficial. I really enjoyed it.
Oh, that is so fantastic. And he's our director of relationships. So I'm absolutely going to be texting him after this and tell him that he was the first person who got shared out. So thank you. Let's hear from somebody else. Something you're grateful for through your learning, throughout Ignite.
So much has been good, but for me, it has been really helpful to see the hands-on type stuff. When somebody shows us hands-on how to get in Bright and do something, how to generate a QR code, something in DocuSign, but the things that like the hows outside of process type stuff when they're showing us how to actually do something.
I love that. So getting hands-on, we're going to get hands-on tonight with some numbers. And Tia, I think I have you on my calendar for later this week.
Yes.
Awesome. Oh, I love seeing all these names and faces and putting faces to names. So exciting. All right. You know what? Let's do one more. These are fantastic. One more. Or it can even be a success story from the past week. Anybody have a success story? Donna.
Well, I was here and at KWN left before Command, DocuSign, and Zip forms. So this has really helped me get back on track because I didn't know any of these systems when I came back. So I am grateful that they're doing this for, it's not just for new agents, it's for everyone.
It really is. And it's, and something for all of you on here who, this is your first Ignite session, maybe you're, a few weeks or a month or even 2 months into the business as a new agent. We talk about, I'm going to go on a little tangent. Is that cool? Can I have like a little soapbox moment for 30 seconds? Okay. This is going to be the coach side of me coming out. So we talk all about reaching goals and hitting goals and breakthrough moments and doing the activities we need to do to succeed, what's the number one activity we need to be doing? Who wants to say it?
Lead gen.
Love it. Having real estate conversations. Now, major sport athletes, right? You got basketball, you got football, you got baseball, I'm a soccer fan. Okay. These are professional, highly paid athletes who prior to their season, what do they go through every year prior to their season starting?
Training camp.
Yes, training camp. By the way, this is going to be super interactive. So I'm just going to sit here and stare until someone answers something. Training camp, right? So you have these highly paid professional pros who every single year go through training camp to perfect their craft, right? Your craft is in real estate is your conversation, your listing presentation, your sales tactics, your closing tactics. There's a lot that goes into it. But yet we only tend to take trainings once and then we think we master it, right? Where you have these highly paid professional sport athletes who take training camp every single year over year. Think of Ignite as your training camp. I highly, highly recommend every year plugging this into your calendar to reset and go back to basics, because it's only going to improve your business. Okay. Thank you for allowing me that moment. Now let's dive in. Donna, I see your hand raised. Is it still up? Do you have something or did you? Okay. Just making sure. All right. So let's go ahead and dive in. I'm going to share my screen right now. Today, our topic is money. Anybody else like that topic? There's a quote I heard some years ago that I really love, and it's the purpose of business is to fund a perfect life. Okay. So again, the purpose of business is to fund a perfect life. So what we're going to be going through in today's session is managing your money, right? I'm assuming on here, everybody, and again, you can, now that I'm sharing my screen, I don't see everybody, so you can use reactions, you can put it in a chat box, you can come off mute. I'm assuming everybody on here has, I'm hoping, a bank account of some sort or some way they hold their money, right? And I'm also assuming on here that everybody wants some closings to happen and some paychecks to be handed to you or direct deposited to you. Is that a safe assumption? Everybody wants some, okay, I see some head nods. I like it.
Yes.
If not, that's a whole nother conversation. We're going to take that offline someday. So we're going to go through low activity, and let me actually put in the chat box for some of you who don't have it. Let me actually put today's participant guide. One second, let me get this in here. All right, so in the chat box, I did put in the participant guide for today. So if you want to follow along with that, if not, all you need for today is pen and paper, because we're going to break down some numbers. Sound good? I will take silence.
That's great.
Awesome. Oh, I love it. Feedback. Thank you. So here's the thing. All of you got your real estate license, right? Now, let me ask you this question. By the way, I'm going to bounce back and forth between sharing screen and not sharing screen because I like to see faces. In real estate school, did they ever talk to you about handling your finances as a real estate agent? No.
No.
Not at all. They didn't teach us anything about what it takes to get to be successful in real estate. That class didn't teach us anything about handling our finances in real estate, right? None of that. It taught us how to take a test and pass it to sit where you are today. And that's it. So we're going to break down some numbers tonight, and a little background about where I am. I started in real estate in 2015. I sat as brand new agent in your seat, taking Ignite. And, I came off of a corporate job. I got my W-2, I worked 9 to 5. Sometimes, I didn't have to worry about taxes. I didn't have to worry about any of that stuff. I just got one form at the end of the year. It said what I needed to file. Things were already paid for me, right? I knew what I was getting biweekly. So that was set to for budgeting. So again, the real estate, it was a different animal. It was a different beast, right? And while being successful, with working with buyers, working with sellers, having closings, I was not so successful in managing finances. I will say that my first year. We fail forward. That's how we succeed. So what I want you to walk away with tonight is an action item. Number one, we're going to break down tonight your profit goal and what that actually means based on the commission checks you get. Okay, we're also going to be breaking down, so you're going to walk away with some action items and some numbers. We're also going to be breaking down steps to take, right? Whether that's opening a new bank account, whether that's talking to an accountant and looking up some taxes, right? I am not a CPA. I'm not going to play one tonight. So do not ask me what you should put away for taxes, because I will say I'm not a CPA, so I'm not going to tell you, because everybody's life situation is different. So if I tell you one number and it's wrong, you're going to be coming back to me and tell me I didn't tell you to put away enough. Now you owe extra money. Okay. All right. So let's dive in. Just making sure everybody can see the screen, right? Yes. Okay, cool. I see some head nods. So let's talk a little bit about the habits for a sound business. So first thing is set a profit goal that funds your big life and pursue the activities to achieve it. I'd like to hear from someone right now. So all of you in a previous Ignite session worked on your big why, your goals in real estate. Does anybody here have that written down? Does anybody know what their big why is and how much money it will take to fund that big why? That they would be willing to share?
My big why is retirement.
I love that.
I want to keep the same lifestyle I have today when I retire.
Okay. So having real estate fund that retirement and that lifestyle? Okay. So I'm going to ask, is that okay if I ask a follow-up question?
Go for it.
Awesome. By the way, if you said no, that'd be cool. I'd move on. I might be a little sad. I'm just saying. So have you sat down, by the way, you don't need to tell us numbers. Have you sat down to say, here's how much money I need in retirement to fund that life that I want to keep going?
Yes.
Good. If not, that was going to be the exercise that you had to do this coming week, right? Here's the thing. First, we need to get really clear on our number. Numbers tell a story. Okay, true story, personal thing about me. Ready for it? I failed math in high school pretty much every year. Okay, numbers and me are not friends. However, when it comes to real estate, I love numbers because it's a different type of number. It's a number that's telling us where are we to our goal. It's a number that's telling us what are we striving for, right? What are we shooting for? You know, if we want that magical 6 figures of $100,000, which, you know, you meet with new agents or I meet with new agents, what do you want to make 100,000? I always say, why? What will that do for you? Right? So first you have to know, what is that number? Then we have to break down and estimate and save for and pay your taxes on time. Oh yeah, it's that time of year. I just filed mine this past weekend. That was my whole entire weekend. It was super fun. Can you tell? Right? So knowing what you need to put away for Uncle Sam. Okay. That is very important. You do not want to, in real estate, get caught off guard and have extra money you have to pay that you don't have. And I know many agents who have done that. None of you on this call will ever do that though, because you're on the Zoom tonight. We're going to walk through using the proven models and systems of the Millionaire Real Estate Agent book. They have a chart of accounts. We're going to talk about some best practices. We're going to talk about how to be fiscally savvy by reviewing your financials monthly, having a budget monthly. We'll talk a little bit about paying yourself a salary. What does that look like in real estate? Right? And just how to become secure in the future. Now let me open it up right now and ask a question. Is there anything besides these? Is there anything specific you want to make sure we cover tonight?
Hi,
Hi.
this is Candace. I did want to know because one of my coaches at my market center, I think it was he or she was saying that the first thing real estate agents want to do when they first get their big check is to buy expensive cars, lavish gifts.
Oh, you put the chat in there. You're save every penny, don't buy the Range Rover.
Yes, because he told a
Perfect
story
statement.
about someone who bought a Range Rover and didn't realize he had to pay taxes. And then
Oh, that's a true, by the way, that is a true story of hundreds, if not thousands of agents out there. I
Oh,
coach
wow.
agents both locally and nationally. I've worked with probably a little over 400 now in the past few years. And I can actually tell you that a very large percentage, I'm not going to make up a percentage, but a very large percentage did just that in their first year. We get excited. Oh my God, I'm in real estate. Look at this check. It's for $11,000. Oh my God, I'm going to go out and buy this and buy this and buy this. Okay. We're actually going to break down an example of that in just a few slides. But yeah, Candace, you are spot on. Do not be going out there with your first check and be like, all right, I'm blowing it all on a, brand new. I'm trying to look around my house right now. That's like why I'm looking around. I'm like, what am I going to look around for? A brand new fridge and all these fancy things, a brand new diamond ring. Okay. No, that is not being financially secure or savvy. That will get you in trouble. Those who try to skirt the system will get caught because everybody has been. Candace, I love that example. All right. Money is good for the good it can do. Let me ask everybody, what's the purpose of business? Why are we in business? Why are we doing real estate? What is the purpose of it?
Well, to help people, but also to help ourselves and our family live a nice life.
Yes, to help people and also help our families and ourselves live a nice life. By the way, nice life means something different for everyone, right? So nice life to a friend of mine is just being with her family, being able to spend time with them, be in her beautiful home with her 2 beautiful children and her husband, and live comfortably, right? Nice life to me is I want to travel out of the country every 3 months. I get antsy. Send me out of the country every 3 months, right? So for all of you, it's what does that nice life look like? What do you want it to look like? And then what is the profit needed for that? Because that is the purpose of business, right? All right. What does this first slide show you? Sold commission $9,000. Paid the order of Jessica. Okay, $57.60. By the way, why is it $57.60? Does anybody want to guess? Okay, so she got a commission check for $9,000, and then that agent walked away with $57.60.
Those are, she had to pay the fees to the brokerage.
Yep, cost of sale fees. Exactly,
Yeah.
cost of sale. And we'll get into cost of sale and how to break that down for each of you. So she went and took her $57.50 and didn't put any in savings, didn't save any for taxes, and put it on her wallet. What's wrong with that?
There's a lot of things she forgot to pay, didn't consider.
Yes, a lot of things she forgot to pay and didn't consider. So what could that result in?
Owing taxes.
owing taxes, 100%. It's actually a perfect time of year for this class because I'm like, wow, it's like tax season. This was not done on purpose, but it's perfect timing. Yep. So now let's look at the other scenario. Same thing. She got a check for $57.50. Okay. Over here, she saved 40% for her taxes. Okay, so she has a tax savings account. She put 40% in there. Now, I'm using 40% because that's what the slide is showing. You may have a lower one, you may have a higher one, depending on your household and your income and all of that. You know, do you have another W-2 job? There's so many things. So please, please, please check with a CPA to determine the rate that you should be saving for taxes. I would say if you don't know, go a little higher, because the greatest thing you can do is think you have to pay all this money and then have extra at the end of the year, right? When you do file, or I guess it'll be beginning of the year. Oops. And then she put some in her business bank account. What do you think that's for?
For marketing, events, anything that's put back into our business.
Yep, expenses, exactly. Marketing, putting money, investing in your business, right? In the beginning, as newer agents, you want to lead with revenue, meaning you want to spend as little money as possible to gain those commission checks to get the business, which, by the way, in real estate is very doable. It's very easy, minus joining the boards and joining MLS and all the fun startup fees they don't tell you about in real estate school that we have to pay as agents in the state of Maryland. Other than those startup fees, there really shouldn't be that many expenses in your first year in real estate. Okay. But every check you get, you want to put a percentage, and we'll talk about best practices. You want to put a percentage aside, so that way you have it for growing your business, right? So it may look like leading with revenue, and then all of a sudden each check you're putting a certain percentage aside to put more money into marketing, right? Or run social media ads to get more leads in, right? Those are just a few examples. There's a lot of them. So financially sound business example is if a 9,000 commission check came in after company split cost of sale, if 2419 went in this agent's pocket. So everything else went to expenses and taxes. So this one check, this is the amount that goes in the pocket, meaning whether you're paying your bills with it, whether you are going to buy yourself a new outfit or new pair of shoes, that is your pocket money to do whatever you need to with it after everything else. Questions on this? What are your thoughts on this? Showing you, by the way, showing you this. Oh, go ahead.
What is everything else? Like 5,760, where it goes out of 9,000?
So out of 9,000, so out of the 9,000, 30% of it went to company split. So that left 5,760, right?
Mm-hmm.
Now, out of 5,760, in this example, 40%, and we'll do math together in just a minute, but 40% went off to taxes to be put into a bank account, right? Separate account, we'll talk about that too. Right. And then another percentage went to business expenses.
Okay.
Right. Which could be anything in the business world of expenses. We'll talk about that in a minute and break that down in more detail. So that left 2419, right? Really what this slide's purpose is to show you that there is a very smart model to help grow your business and fund your life without getting yourself in trouble and doing it the right way to put money back in your business to grow it faster and longer, right? Is anybody in the business just to be in the business for like 2 days or a month? Donna, I see you laughing there. That was hilarious. I know, I had to ask. Real estate is the long game. Okay. Number one, the faster you get into activity, the faster you get results, but your results still don't come until 90 days in minimum. Okay. You're not seeing that first check for 90 days. So those who got licensed yesterday, I am not a sugarcoater. I'm going to tell you how it is. So it sets you up for success.
Okay.
Each day we're not doing activity, we're now 90 days. We're now prolonging our 90-day paycheck. Just so you know that, right? So what we want to do is have the long game of saving money, investing back in our business so we can have closings every single month, as opposed to a closing in 90 days and then another one like 6 months later. And then we end the year with like 3 closings and we made $22,000. By the way, I'm totally looking at facial expressions right now. And some of you, I love this because some of you are like nodding and smiling and others are like, I don't know about this, right? Don't worry, we're going to break it down. We're going to break it down. Okay. So let's dive in. Let's dive into numbers. The numbers you're seeing here are based on studies from the Millionaire Real Estate Agent book, which we refer to as the Red Book, which, by the way, if you do not have, please go see your TL or coach or someone at your market center and say, hey, do you guys have this book? I want it. Or go on Amazon and get it. For those with Keller Williams Legacy, just come find me in the office. I have the largest stack in my office possible. So please come take one out of my office. They're kind of taking up too much space. So this book is a series of studies done over, oh my God, I don't even know how many years, that Gary Keller and a whole bunch of researchers did on best practices of hundreds of top agents. And the percentages we're seeing here are important because they help you evaluate the health of your business. This does not mean these are going to be your percentages as of today. Some of them might be in the future, but these are ones to start understanding and start tracking to be able to grow your business faster and bigger. Okay. So the idea is to drive 40% to your bottom line. Bottom line meaning your profit. Put it in your pocket. Okay. So we've given you an example here what we're doing in this example is we're saying there's a $10,000 commission income. Right? So you had a closing and there's a check for $10,000. Now, cost of sale. Okay. Cost of sale here, 30%. Most cost of sale market centers, most Keller Williams is 70-30 split. And then there's that royalty fee. So cost of sale. Ooh, hold on. Somehow my music jumped on my phone when I was putting up a calculator and I don't know why, so that was super fun. All right. So we're taking out 30% that goes to the split until you cap, right? So we talk a lot at Keller Williams. For those with Keller Williams, we talk a lot about capping to keep 100% your commission. I know there's some non-Keller Williams on here, so bear with us as we talk through this. You're going to learn a lot of lingo. So cost of sale is what are you paying to be in business to your brokerage? Again, the nice part is that this only lasts at 30% only is the cost of sale until you pay in your cap. Then you get to keep 100% until you reset the year after, which is why as coaches, we're always like, okay, how can we help you cap faster? How can we help you cap faster?
Quick question.
Yeah.
Is every year your cap, you have to reach your cap yearly, right? It starts over every year?
Yep, it starts over every agent year. So whatever month you joined,
Okay.
if an agent joins in February, their agent year is March 1st.
Okay.
Yep. So to give you an example, I worked with an agent. His name is Matt. He worked a full-time job and had a 1-year-old when he started the business, and he capped in 10 months. So he paid in that 30% for 10 months. And then he had 2 months of 100%. But he built such a foundation, because again, we're in the long game, that the very next year, he happened to reset in January. The very next year, he capped in May. Meaning June to December was 100%. So cost of sale was 0 for that many months. And then January came back and it reset. So the cost of sale is going to be an amount with when you're with Keller Williams and you cap, that cost of sale will be 0 until it resets. All right, operating expenses. What do you guys think operating expenses are? What does that mean?
I was just gonna ask you that. Are those the ones that we're talking about? Like our membership fees and CenturyLock and those type operating expenses?
Yep.
Okay, the board and okay.
I was gonna say marketing.
Yes to every one of those answers.
I would say realtor board fees.
Oh, repeat that.
I would also think like your realtor, your board fees, your different classes.
Yep. Yep. So board fees. So you have the board, you have MLS, you have CenturyLock, you have marketing you might be doing, right? Think of it as you own a business. What's keeping the doors open? What's keeping you active, right? And allowed to do business in the state of Maryland, right? So on average, operating expenses for top producing agents is 30% of their income. Now, that may seem high. I know when I first started out in the business, I'm like 30%. I didn't have operating expenses of 30% of my first year. My operating expenses were maybe 15% in my first year. I didn't pay for anything. I found everything I could possibly find for free. If there is a free button, I will find it. Okay. So the operating expenses, we can't get around the board fees if we want to do business in Maryland. We can't get around MLS. We can't get around CenturyLock, right? Those are givens. So for all of you, and now each of you have different boards that you're part of. So I'm not going to break down those fees for you. If you don't know what those are, you can go onto their website and check it out or ask somebody in your office. But knowing what they are annually will give you a good gauge of what you need, what percentage you definitely know you have as operating expenses before any marketing or any of that goes into your business. Okay. So we're going to use this best practice of top producers of 30%. So 10,000 commission check, 30% cost of sales, 30% operating expenses leaves us with a profit of 4,000. Everybody see how we got that?
There's still
Ilana, can I jump in?
Yeah, absolutely.
So in this particular example where you have where the agent is walking away with 7,000 after the split, or 7,000, but
4,000.
no, 10 minus 3 is 7.
Right, and then minus
So-
another 3 for operating expenses.
Right, but I'm a CPA, so I kind of think of things in terms of taxes.
Got
So
it.
in terms of 10 minus 3, so the 7,000, if that's the only sale that this agent made all year,
Mhm.
would the agent receive a 1099 for $7,000?
Yep.
Okay.
Yep. You will receive from your market center a 1099 every single year showing any amount that was earned, even if it was $500.
Right. Okay.
Yep.
And then the operating expenses are obviously, your multiple lists and all the rest, CenturyLock and so forth. But I was just trying to isolate that the amount that is going to show up from a governmental agency in your mailbox on January 31st is a 1099 from KWRC saying, congrats, here's $7,000 that you better put on a tax return somewhere.
Yep.
And that will ultimately drive your quarterly estimated tax, decisions and so forth.
You are absolutely correct. Is this Robert?
It is.
Hi, Robert. Nice to meet you in person.
Nice to meet you
Zoom
too.
person. All right, absolutely correct. I'm glad you asked that question. That was a really good question. Thank you.
You bet. Thanks.
So let's talk a little bit about the flow of money. Okay, so we have these key percentages of the economic model. Now, the flow of money, okay, we have income, what goes in, expenses, what's coming out, and then what's left. Okay. Now, we've already determined the goal of real estate business. We're in real estate because we love helping people, and we're in it to help people with the greatest purchase of their life. The goal of a real estate business, where you're going to use the word business and really highlight that, is profit, right? If all of you went out today and you decided to open up your own Dunkin' Donut franchise, right, which is about $150,000 to open up, not including rental space and all of that, or rent per month and all the expenses there, I would imagine that you would probably want to see a profit on selling all those donuts. Okay, so real estate is the same thing. I don't think anybody got into real estate because they want to help people for free. Is that correct? Is that a good assumption? Yes, okay. I see some nods. All right. Now, the other side of this is, let's work it backwards. What's your goal? How many homes do you have to sell to hit your goal? And then how can you maximize expenses to maximize your net income? Right? So how much money do you want in your bank account at the end of the year? How many homes do you need to sell? So these are the three questions as an agent you absolutely need to know the numbers of. If you take anything away from this class, this is it right here. But don't take this and then jump off, because then I'll just be talking to myself. So one is, how much money do you want in your bank account at the end of the year? So we're going to do an activity. Everybody write down. Okay. So I want everybody to take out a piece of paper or their phone or something. And I want you to write down a number. How much money do you want in your bank account at the end of 2022? From real estate. Let's make it specific, from real estate. So if you have other jobs, other side business, ignore all that. We're just focusing on real estate. Now, the question you're going to ask after that is, how many homes do you need to sell to achieve your goal? Okay. We'll break that down in just a minute. And then how can you minimize your expenses to maximize your net income? Now, that's going to be a little different for everyone, right? Depending on lead sources, how you want to generate business, how you do marketing, expenses will vary, minus the board, MLS, and those fees. Business expenses are going to vary for every single one of you, because your businesses are going to be a little different. Okay, does everybody have those three things written down? Okay. All right. So let's talk about your income from your real estate business. Commission earned from closed transactions. You got listing income. By the way, sales means buyers. So for any brand new agent out there, when you see the word sales, it means buyers. So you have sale income, you have referral income, and you have leasing income. Any questions on these four types of income?
So listing income is when you get a listing to sell somebody's house and the house sells. Sales income is when you become a buyer's agent and help somebody buy a house that somebody else lists.
Mm-hmm.
Referral income is when I meet a wonderful person that lives in Westminster, and I call my friend Donna, And I said, and I give her the lead, and she gets a listing out of it. And she pays me, some kind of fee for that.
Yep.
And then leasing income, is that when you have your own rental property?
Leasing income is when you work with renters. So you could either be working with somebody who wants to help renting a property, or you're working with someone who wants to list their property for rent.
Okay. All right. Okay. Thank you.
So rentals, yeah. Yep. Perfect explanation. Love that. Which, by the way, I want to just hone in on something here. Most agents, especially newer in the business, forget about the referral income. Okay. They don't consider that as number one income. They also don't focus on it at all. So are there any agents on here who are from another state originally?
Yes.
Where are you from?
Washington State.
Oh my God, is this Kalani?
Yes.
Hi, congratulations, by the way. I heard you pass your
Thank you.
test. She's the office, the Keller Williams office I used to work at. So when you see me say hi to people, I'm like, oh my God, connections. So Washington State, you said, right?
Mhm.
Okay. Do you have friends or connections out there at all?
Loads of them. And I'm
Loads.
starting to reconnect with them on Facebook.
Okay. Love that. Connect with them on Facebook. So here's the thing. A best practice that Kalani should be doing is not only as she's talking to buyers or sellers, she should be marketing. And now this could be through social media, phone calls. Notice everything I'm mentioning right now is free. Okay. Phone calls are free. Private, DMing people through social media to touch base with them, back in Washington State is free. Right? Shooting them an email is free, right? She should definitely be tapping into this group of people in Washington State every single month to see what real estate needs they have that she can help with, and educate them that she works with and partners with agents across the nation. And as I like to tell people, not all agents are created equal. So when you have a real estate need, please, 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 let me be the one to connect you with someone good. That's how I like to say it, by the way, right? So then she gets her friend out in Washington State who says, oh my God, I want to buy a house. I think I'll call Kalani and see who she knows. Right? So real estate is absolutely, hold on here. I need to meet somebody, but I'm not sure who.
It was me.
Oh, okay. Thank you. By the way, I will totally call you out if I need to mute you. Right. Oops. Jumped ahead. So please, as agents, don't discount the power of referrals. All right. So let's break down some expenses. Cost expenses. So we talked a little bit about this, right? We talked about the commissions paid to the office, meaning the fees to your broker. Okay. Most locations is 30%. Some it's different. That's going to be your percentage for your office. Royalty fees paid to KW. That's the same for everybody. That's 6% nationwide. That doesn't change. That's a Keller Williams International royalty fee. I like to call it a franchise fee because that's really what it is, right? Then there's commissions or splits paid to employees or independent contractors involved in sales. So that only applies, for example, if you have to pay out a referral fee to somebody. Well, actually, referrals is number 4. It only applies if, let's say, you are partnering with another agent, or you're on a team and there's a split with a team, right? Teams have their own splits. You'll have an office split and a team split, 2 very different things. And then finally, referral fees, right? Was this person I'm working with, this buyer I'm working with, referred by Kalani, and now I need to pay Kalani the 25% I promised her, right? So these are all examples of different costs of sales. Number 1 and 2 are givens. You're always going to have it until you cap with Keller Williams. Number 3 or 4 are going to vary depending on if you're with a team, it's a referral. They may exist, they may not exist in each transaction. All right, so let's dig in. So first scenario, we haven't capped yet. We're working on that. So what is the net commission check you will receive after cost of sale? Okay. By the way, if you do have the participant guide, this is, I believe, page 9. It's either 9 or 10 on there, or you can just whip out a calculator or a piece of paper. So you're going to see some formulas. GCI means gross commission income. That's that commission check you get from the table. Okay. Oh, thank you. It's page 9. Awesome. Appreciate that. So what is that gross commission income? Let's just use an easy number of $10,000, right? So gross commission income times 30%. So the second blank would be 3,000. So it'd be 10,000 minus 3,000. 6% comes off that 10% as well, sorry, that 10,000 as well. Okay. So if we're doing math, that's $600. So if the gross commission is 10,000, we subtracted 30% and the royalty, what is our net commission? Who's figured out that number? Who are my math people on here? I know there's
What
some.
did you say gross commission was?
6,400.
6,400. Yep. Before I move on, because I know that when I first started as an agent, I would look at the screen, because again, I told you I failed math in high school. I would look at the screen and say, what am I doing? What am I timesing? It did not make sense to me at all. So please, this is your time. If you have the question, I guarantee you that 10 other agents on this call have the question. Did everybody see how we got to 6,400? I'm going to take silence as a yes. Now, second scenario, you have already capped on your royalty. By the way, at Keller Williams, royalty caps at 3,000. So once that 3,000 is paid in for that agent year, you're capped on it. Okay. So here we're doing hold on here. You've already capped on royalty and have not yet capped on company dollar.
Yeah, that seems a little backwards.
Yeah, I was gonna say the formula does not match. Wow, I'm gonna have to email myself some Keller Williams Keller Williams faculty members who created this material. I love finding mistakes and things that I can email someone about. A little secret about me.
That
So-
should either say you've already capped on company dollar, but you haven't capped on royalty.
Correct. So we're gonna take it as you've capped on company dollar, meaning that 30%, but not on royalty. So we're gonna take that $10,000 again. We're going to times it by the 6% royalty, right? Which is 600. So what does that leave us with?
Well, that would be 9,400. But I think what's wrong with that is that typically you're going to cap on royalty quicker. So that should really say that the formula is GCI minus the company dollar and your net commission, because the royalty is what goes away first. Not
Typically, yes. Typically, yes. So let's do it that way. Let's do 10,000 gross commission income GCI, and we're going to minus the company dollar of 30%. 30%. Thank you. Right. So now what's our net income or net commission?
7,000.
7,000. Right. Now, let's take it one final step. You've capped on both royalty and company dollar, and you just had a closing for $10,000 gross commission income. So what is your net commission?
10,000.
10,000.
10,000. Trick question, you got it. Okay. Before we move on from this, what questions do you have? What questions do you have? And I'm going to follow up with another question to you guys. So before we take it to the next step, what questions do we have on this?
Okay, I hate to do this, but I need to go back to the first formula because I'm lost.
I love that you asked that. I love that. Okay.
Where It says GCI minus CO $. Is that the cost of sales?
Company dollar.
Company dollar,
Yep.
okay.
So what we
Hey,
did is we took $10,000 of GCI,
Okay,
and then 30% of that's 3,000. So we subtracted 3,000 from 10,000.
3,000 from 10,000, okay.
And then 6% is the royalty. So it's 6% off of that GCI again. So 6% of 10,000 is 600.
Okay, I'm sorry. Can you go back?
No, hold on, I'm going to do it this way. Ready? I
Okay,
love the whiteboard. Can you guys see the whiteboard now?
yes.
All right. So we have GCI,
Mm-hmm.
okay, of $10,000. Okay. Now we have company dollar of 30%. And we have
Okay.
royalty of 6%. So to figure out what we're looking for is we're figuring out the net income. Okay, so if we have 10,000, okay, and we subtract 3,000, 3,000 is the 30% of 10,000,
Company dollar.
right? That's the company dollar, yep. And then that 10,000, we subtract $600, which is 6% of 10,000.
Cap is 3,000, you said. Okay, now I understand.
That caps out at 3,000.
Yes. I
This
got it.
caps out at
Honey,
27,000.
So now what we're going to do is we're going to take 10,000 minus, ooh, that's not right, minus 3,000 and then minus 600, which gave us 6,400.
Ilana, what they.
I'm
what they
sorry,
might
I was
wanna
gonna
do-
say, you thought you were bad at math. I'm really.
No problem.
I have to work it all the way out. Like you have it in the parentheses, I think there.
Yeah, this is to show you that the way I got 10,000 is to take the 30% of the 10,000. And I put my
Okay.
email, by the way, in my, right next to my name in my little picture box, and I'll put all my information in the chat. So, you know, I am happy to sit down and walk through like just examples of this.
Okay. Thank
And I
you.
see Danielle, your hand is raised.
So I just wanted to share with maybe some might be easier for some others. I found it easy is I just take the GCI, like I would take the 10,000 and times that times 64%. So I would times it times the opposite. And that's what I would get as my net, which would be the same 6,400. So rather than going through all those steps, if you just take the opposite, it might be easier.
We're going to times 10,000 by 64%. By the way, 64% is what is left after 36 is taken out. 30 for company dollar, 6% royalty, that equals 36. So if we take 100% and we subtract 36, we get 64. That's how Danielle got that 64, right? Which
Oh,
equals
okay.
6,400. Donna.
I was just going to say, in order to not get confused because of the error they made on this formula, on number 2, it says you've already capped on royalty and have not capped on company dollar. What is the net commission you receive? So the formula is GCI minus company dollar 30% equals net commission. So if they just put a line through that royalty of 6%, because I don't know anywhere they're going to cap on company dollar before royalty. How would they ever do that?
That is a great question that please, you know me, I am not shy of asking. I'm going to actually email the slide to the faculty people at Keller Williams International in Austin, Texas, and be like, hey, question about this.
What is this?
Yep.
But the way it's written down now is wrong. So it's not minus the royalty. If they've already capped on the royalty, it's minus the company dollar.
Right.
So scratch out that royalty GCI 6% and in its place put company dollar 30%. And then it will be correct.
Yes. Exactly. So we talked about some numbers. Now, for some of you, you're like, all right, I got it. Others, this is going to take some practice. But here's the thing. By knowing the economic model, which are these numbers, and by figuring out how do we, number one, figure out how much money we're actually netting, right? What we're able to do is develop the future we want, right? As the screen says, build our future. When we don't know, number one, our goal we're striving for, if we don't know how to get to our goal, how many closings it takes at a national commission price to hit our goal, then we're really going into each week just hoping hoping something takes place and hoping we're successful. Is hope an action item? Does hope lead to hitting our goals that we want?
No.
No. Oh, I know you.
Hope
I
is
know
not
you get around all
tangible.
the time.
Hope is not tangible.
Hope is not tangible. Okay.
You cannot purchase hope.
Oh, I like that. Good. You cannot. Oh, I need to write that down, guys. So we should all be taking like ahas away from these trainings. Okay. You cannot purchase hope. Kalani, I need you to like send that to me. Okay.
I'll do that.
Okay. Thank you.
Just like the mess that I sent to your TL.
I don't know what that is, but awesome. Yes.
You didn't see that?
Nope. I will have to check that out.
Success is determined by your mess.
So, oh, that's a good one too. All right. Kalani's coming up with all the phrases today. All right. So let's plan for our future, shall we? Let's do a little future planning. All right. So we're going to use a net profit goal. Now, all of you wrote down a profit goal in the very beginning of this session. I asked you the question, how much do you want in your bank account at the end of 2022? Okay. So for this example, we are going to use the magical $100,000. This number could be bigger for some of you, could be smaller. We're just going to, for this example, use 100. Okay. All right. Now, what we're going to do here, where it says gross profit goal, 60%, and gross commission income. Here's what I want you to take away from this. Right now is going to be a little bit different because we're going to be factoring in some taxes and other percentages. So for those of you who maybe I lost a little bit on the last slide, you may get a little lost on this slide. We're going to walk through it probably twice. And obviously you can reach out for more support and help on this. Okay. So the very first thing I want you to write down on your piece of paper is $100,000 or whatever you want your profit goal to be. To calculate the gross profit goal, okay, the second line here, we need to take into account tax liability on our net profit. Okay. Now, for sake of this training, not to use this as your own number, disclaimer, I'm not a CPA. What we're going to use here is we're going to anticipate a 40% tax liability, which means gross profit goal would be 60% because if we have a whole 100%, 100,000, and 40% is tax liability, that's where the 60% comes in. Okay, so I'm dividing 100,000 by 60%. I know we're all up in our calculators right now. Okay, we are whipping out. This is one of those classes where you actually have the instructor saying, please take out your phone, right? As opposed to other classes where they say, please silent and put away your phone. All right. So now we're going to calculate the gross commission income you need to attain your gross profit goal, meaning we're going to, how much income do you need to obtain the 166? So the formula to calculate this is to take your I'm going to lose some of you here, and that's okay. We're going to go back through it again, is to take your gross profit goal, okay, 166,666, and divide it by 40%, meaning divide by 0.40. I'm going to pause here as people whipping out calculators and writing it down. All right. Now we're going to, so our example we're going to use is an average commission income of $7,500. Okay. So basically an average commission check. So what this is saying is to hit our gross commission income, we would need 56 home sales. Now, I want to just notate something here. All right. This is taking a bunch of things into account. Number one, a 40% tax liability. If yours is lower, these numbers change. Okay. This is also taking into account, give me a second here. Well, I just said the tax liability. Yep. Okay. Now, we already talked about cost of sale, company dollar and cap. So this is using an average of 23,000. And then we're going to use the top producer MREA model of 30% of expenses. Again, as a new agent, your expenses most likely will not be 30% in your first year. Right? As you grow your business, you never want your expenses to go above 30%, because then you're off model and you're not going to net the profit that you want. All right, how many of you did I lose?
I have a question.
Absolutely.
Are we doing the 40%? I'm just making sure I'm understanding this right as far as taxes.
Mm-hmm.
We're putting ourselves like in a 40% tax bracket. Is that why we're doing 40%?
Yeah, we're just going to use a national average of 40% tax bracket.
Okay, when I Google 2022 tax brackets, for the most part, that's making like 539, about 500, 600,000 perhaps per year. Like that's the tax bracket that we're going by.
So as it comes, I'm just using a standard, like, so when we look at tax brackets, and again, I'm not going to get into, we're not going to go on the topic of
the same as tax rate, right?
So meaning if I get a $10,000 check, I need to put some away for Uncle Sam based on my family household, my husband, having a daughter, blah, blah, blah. My tax back bracket may be X, where, you know, this person over here who maybe isn't married, maybe has, doesn't have kids, their tax bracket's going to be Y, right? That's an accountant, that's a CPA who answers that.
I got it.
Yeah.
Okay. Tax
For this
rate.
instance, we're just going to use a standard number of 40%.
Okay, got it.
Yep. Again, if yours is lower, cool, you just gave yourself a little raise and it will be less homes to hit your goal. If it's obviously higher, then, factor that in.
Ilana,
Yeah.
can you explain the third line where you take the gross commission income and divide, or you divide gross profit by 40%. What is the logic behind that one again?
So give me 1 second. Now that the other slide had that one mistake, now I'm literally sitting here going through these slides with my calculator to make sure that everything is correct.
Sure.
So I'm on my calculator, just so y'all know, I'm not sitting here texting people because that would just be rude. Oops.
Your net profit goal, your gross profit goal. Divide the
Right,
net
so if you have, what I'm gonna do, I'm gonna share it with you on a different screen. Give me 1 second. I'm actually gonna show you guys a cheat sheet that you all have access to, which is my personal favorite go-to. Give me 1 second as I bring this up. There we go. All right. Does anybody know where I am right now? What screen I'm on?
It's in command.
Command goals.
Yes.
Are we gonna?
Yes. Just to show you guys where I got here. Let me actually go back. So if you're in command, on the left, there's reports. When you go to reports, there's a button that says goals. Okay. And when you go to goal setting, this is where you can actually type in. So I'm going to do 100,000 profit goal. Okay. And then it'll automatically put in 30% expenses, 30% cost of sale. Okay, because it takes it right from the Millionaire Real Estate Agent book. Obviously, you can change this. If you think your expenses will be lower, then absolutely go ahead and change this, right? I can put in 20%, 15%, right? You can kind of play with the numbers. And then I'm going to say the average commission is $7,500. Okay. So now what this does not take into account on this screen right here is what? We have operating expenses, we have cost of
Royalty.
sale,
Taxes.
taxes. Taxes are not figured into this. Right? So with that being said, without paying taxes, which none of you should ever do, ever, what this is saying is 250,000 in gross commission income will net us an annual profit of 100,000. So if we want 100,000 in our bank accounts by the end of this year, the checks we get should add up to 250,000. But that's taking into account expenses and cost of sale, right? So what we need to do is calculate how much more do we need to be able to pay taxes as well, right? So let's say I lower this. Let's say I do, I'm gonna go low. I'm gonna go 15% expenses. Okay. Actually, I like an even number. So 20% expenses. And then we're gonna use this screen right here. We're gonna use this screen right here and calculate in taxes. So we're gonna use the just national standard of 40%. Doesn't mean it's your number, just is a number we're gonna use, okay? So who here is the math person? I have a feeling it's Robert, by the way. Who here is the math person who knows well, first let's do this way. If we make 200,000 in gross commission income after expenses and cost of sale, okay, and we take 40% out of that, we're left with 120,000, right? But that's not taking into account expenses and cost of sale. So really after, if we make 200,000 in gross commission income, we're actually profiting 60,000. Does everybody see how I got that? Should I ask, does anybody not see how I got that? It's probably a better question for me to ask.
My question right now is, would it be unwise to include your taxes as part of your expenses?
Yeah, because they're two separate things. Okay, your taxes, you should be having a separate account. You put your taxes away, or even be paying quarterly taxes, right? Depending on
Right.
how much income you're making. Now, expenses are things that, again, I'm not a CPA, so I'm not going to guide you here, but expenses are things that offset some of the taxes you will owe. Right? So if I have 20% expenses, those are typically write-offs. But if I combine the two, taxes and expenses, what's being written off and what's not? Right now, so I get what you're saying, like savings wise, does that make sense? So technically, if I put in here 20% expenses, 40% taxes, and I do 60, right? But again, that doesn't line.
I was just saying, yeah, I see where you're at there.
Okay. Yeah. So you definitely have to keep them separate. What we're looking at here is if we do 200,000 in gross commission income after expenses and cost of sale, yes, our profit is going to be 100,000, right? With an average commission check of 7,500. But really what's in our bank account, our spending bank account, not our savings bank account, but our spending bank account is 60,000. Because again, the other 40 went off to savings. Doesn't mean you're paying that much, right? This is where, as a real estate agent, I will say this, one of the biggest lessons I learned the hard way, I will say it that way. One of the biggest lessons I learned the hard way is not having a CPA who knows real estate. Having an accountant who's been an amazing accountant is wonderful, but if they don't know the real estate industry, they're going to be missing out on a lot of things that real estate agents can take advantage of for write-offs. So when you're looking at doing your taxes, really figuring out like, okay, do I want to do them myself? Right? TurboTax it and just make sure I Google what and learn and attend some tax classes at your market center when it comes to that time of year to learn what can you do, what can you write off? Or do you hire a professional as a real estate agent to do it for you? And Donna is nodding her head. I'm assuming that nod is saying hire a professional.
Hire the professional. And I was lucky enough to find someone who had been a realtor. So I'm very lucky. He always knows. He stays in touch with what I can do and can't do.
Yeah, I will tell you, we had a accountant actually come and teach a class in October for a CPA, a local CPA come and teach a class in October. And 90% of his clientele are real estate agents. His business is, he's been in business well over 20 years. And he actually brought with him the red book, the MREA book, earmarked and highlighted. And he's like, this is my book. Right? Now you find someone who like, he knows the book and he does accounting for real estate agents. I'm not putting a plug in for him, but it was a great class, which we typically bring back once a year. Your market centers probably have it come once a year as well. Most places do. If not, I highly recommend asking your leadership to bring somebody in.
Can I say something?
Absolutely.
So just to give people a little bit of hope, the tax bracket for people making between 85 and about 160 grand in 2022 is around, I think it's 22%, or is it 24%? It's 24%. That's federal only. And then you've got Maryland tax on top of that, and to some degree self-employment tax, which is kind of a self-employed person's version of FICA and things like that, Social Security tax. So, but the point I'm trying to make is that since as realtors, since we are able to deduct so many things, like all those business expenses and depreciation on your car, car expenses and home office expenses and such, the odds of you actually having a 40% tax bracket are relatively slim, especially for new agents starting out. I think it's probably more realistically in probably the 25% bracket, because ultimately your tax bracket is also going to be contingent on things like your itemized deductions. So if you own a home and you have mortgage interest, if you make charitable contributions and things of that nature, I think most people, I know for your training, you want to say, hey, 40%, cover yourself, be safe. And I get that. But for people who are kind of cringing at this point, saying, oh my God, that 40%, that's going to kill me. It's probably not going to be quite that bad.
Thanks for saying that. That's what I was Googling. I was looking at the tax bracket, making sure I was looking at the right number, which is the tax rate. It was the same thing. To be up at about 40%, you'd have to be making at least 539,000. So that's what I was trying to make sure that what the different brackets were.
Right.
Very, very helpful information. And Robert, I appreciate you saying that, because looking at these, here's the thing. When we attend these type of classes, and once a year, there's business planning clinic, you're going to go through best practices of top producers and numbers for top producers. For example, 30% expenses. Again, I didn't hit 30% expenses until probably just 2 years ago. Okay. So the reason why they're using those as numbers is to start thinking like a business owner for the future. Yeah, it's a little scary today because we're like, oh my God, I haven't even signed a buyer yet for a buyer agreement. Like, I don't even have business, right? So it is a scary number to look at. Just know that your number may not, I love that you said that your number may not be that high, but we want to start training our brain and getting into the mindset of being that business owner, as opposed to just, I'm working in real estate as an agent, right? No, you are all, guess what? You are all CEOs of a company right now. You all know that? Every single one of you, I want to see your faces. Every single one of you is a CEO of a company. The brokerage you're with is your support umbrella for that organization. Okay. So for example, Tia, she's with us. She's with Keller Williams Legacy, but it is the Tia, is it Howell? Tia Howell? Okay. I pronounced that right. So Tia Howell is her company. She's the CEO. She's going to wake up every day and say, should I hire or fire myself today? Right. Which, by the way, a great question to ask yourself every day. Would I hire myself, fire myself, or write myself up on a performance plan? Keeps us in spot check when we don't have anybody else doing it. So we want to really, a lot of the trainings you're going to go through Ignite and through your market center and other best practices and trainings coming up is to think bigger for long term. Not just when am I getting that one closing, but when are you hitting 250,000 in your bank account? When are you hitting 500,000 in your bank account? There's multiple millionaires. When are you hitting $1 million in your bank account? Right? No, nobody wants that. Okay. Tia does. Tia's like, I want it. I want it. All right. So let's talk a little bit about, let's switch gears. Let's talk a little bit about best practices. Okay. All right. Number one, we talked about this you talked about this in previous Ignite sessions. We talked about in the very beginning of tonight. I cannot stress enough, gain clarity on the life, your big life hopes and dreams. What do you want to achieve? What do you want to accomplish? Do you want to buy a bigger house, buy a different car? Something about, something with your kids in college? Is it simply to have an amazing retirement and live the life you want to live, right? There's no wrong answer because it's yours, right? Set your personal and business budgets. Now, this is important. Let me ask everybody, why is you're all CEOs of a company now. Why do you want a budget, both on a personal level and a business level?
If you don't set a budget, you are going to spend all of your money very quickly.
Or spend it on the wrong things. I've got money in my bank account, so let's do this or buy this.
Yep.
Or if you don't have a budget, you're going to be bankrupt pretty quick.
Yes to both what Kalani and Donna said, right? You need to have a budget. Also, this helps set if you don't know what goal to set and you're just making up a number just because it sounds like a pretty number, like I like 120, let's go on 120,000. Well, what are your monthly expenses? Gas payment, car payment, rent or mortgage. How much do you spend on food every month? Do you like going to Starbucks? Do you like going out to dinner sometimes, right? Don't forget to have a little fun, live life, right? What is your monthly account that you need? What's that monthly amount that you need? That's the first number you need to know, right? Because if the number, and if you don't know that, where you can just, don't share it on here, but you can just spit it out. Someone's like, yeah, what do you need per month? If you're not able to be like 5,200, and here's why. That's your first step. That would be the homework assignment for this week. Set aside an hour, sit down with a piece of paper and your bank account and just write down. There's a lot of great templates on Google. If you type in household budget templates, there's some great ones on there that gives you everything you need to plug in. You got to have the personal one first to be able to have the business one. Next, it talks about setting up a business entity, right? Business entity could be an LLC. There's the thing, as an agent, you don't have to do this as a new agent, right? If you do a lot of investment properties and you want to protect yourself, that is a level of protection that you could give. It's also extremely easy. There's online forms that are online sites that help you set it up, as well as CPAs. When you grow your business larger and you have, people maybe you hire and you build out a team and you're pulling in, $400,000 or $500,000 a year, maybe even $200,000-$300,000 a year regularly. You may look to start things like an S Corp. I'm not going to get into what that means, but it basically means paying yourself a salary, right? Things to think about for the future, not for today. Okay. One thing for today, though, is open. If you have not done this yet, homework assignment for this week, go open an additional bank account for taxes and other savings. Now, this could be a separate account just for taxes and a second account for your business savings, right? What you want to invest back in your business to really not commingle, right? That's up to you. But you definitely don't want to mingle your real estate with your personal home account you share with whoever you live with. It will get hard to manage and messy. The Millionaire Real Estate Agent Chart of Accounts. If you go to, and I want to say that this still exists, but let me just double check it. Give me 1 second. I'm actually going to see if this still exists. I'm going to check it right now. Oops, got ahead. I'm looking this up. So I used to be able to pull up the chart of accounts on KW Connect. Let's see if I still can. Sometimes things get moved. Yep, that one got moved. All right. Sometimes I can pull it up quickly, other times not so much. That is okay. Oh, you found it here, Keller Inc. Vanessa in the chat box. Love it. Oh, that's the red book. I love it. So we have the red book on here. However, if you scroll down, so let me show you what I'm looking at here. Okay. So in the chat box, thank you, Vanessa. She put in Keller Inc. So not only can you buy a whole lot of red books or just go to your brokerage and your team leader or coach or someone and ask, but the very bottom, there's so many free resources. There's a big why. I'm going to download that right now while I'm thinking about it. Cool. Oops. There's the chart of accounts Excel. This is a Excel worksheet. It will be overwhelming when you first look at it. Okay, but you can download it and it will walk you through the math that we walked through today. Okay. So in the chat box, there's that link to save and go through, and there's some great free resources at the bottom to just click and check out all of them. Economic model exercise is actually what we walk through in this class. So if you want to have practice and walk through it again, download that model exercise and walk through it again. Sit with some fellow agents in your market center and do it together. Everything's always way more fun together. My opinion. We talked about tax accounting software to track things, right? You want to keep good records. One out there that some agents use, I know, is QuickBooks. Do your own research on what you like. There's so many different accounting softwares that are out there. Some are free, some cost a little bit of money, which is an operating expense, by the way. Okay. So definitely have something where you can store your receipts, track your mileage. That's important. Get a mileage tracker on your app on your phone. It will do it for you.
I use Everlance for tracking my miles because I'm doing the real estate business now, but I also do DoorDash when I'm not doing either real estate or working at the market center.
Could you put that in the chat box?
Everlance, yeah, I can do that.
I hear it, but my brain's not processing how to spell it.
This is good.
Where's that from?
Right.
Is it from the book?
So, oops.
Look at it after
The other one, hire an accountant, talk to a CPA.
Okay.
Set dates to calculate and pay your estimated taxes. Now, if you're a brand new agent, you have no real estate money coming in yet, that doesn't pertain to you right now. However, when you start getting deals and start having commissions, setting aside taxes, what's going to happen after your first year is you're going to be able to estimate, okay, if I double my business next year, approximately how much will I owe in taxes? And then you can actually pay them on a quarterly basis. So it's automatically out of your account. It's paid for. It's done. Right? It makes it so much easier in our lives, personally speaking. Another learned the hard way lesson for myself. And then, of course, prepare for your future, right? Savings, investments, retirements, insurance. What do you need? What are the things you need to put money away for? So again, moral of this entire checklist is don't just take that $9,000 commission check, pay that company split in expenses, and then go on a shopping spree. Be smarter than the average agent. Questions on any of these? All right. So we're going to switch gears. This is all fine and dandy. We can talk all about numbers. We can crunch numbers. We can break down math all day long. But if you're not doing your daily success habits, will you ever have a commission check? Will you ever put any of this into practice because you don't have money to put into account? No, I saw Donna shaking her head no. No. So daily success habits. Let's open it up. What have you been doing? Have you been having conversations about real estate on a daily and weekly basis? By the way, these are questions you could either answer in the chat, answer out loud, or just thought-provoking questions to ask yourself. Whatever you're comfortable with.
I'm going to take this one. Being honest, I don't think that I pursue business enough because I'm not comfortable enough to know what I'm doing. I'm really looking to get like my first sale before I pick up momentum, before I feel like I'm confident enough to know what I'm doing. But like last week, there was 2 potential people that were looking to work with me, and I just felt so antsy, like, oh, okay. And I mean, I knew the beginning stuff to do the buyer's agreement and send them to the lender and things like that. I got them set up like on my app, and I got them like an automatic email list so I can start figuring out what they wanted and just things like that. But I haven't seen the whole process through yet. And I have questions along every step. It seems like I've reached out to my mentor, asking different questions at every step that I don't want to like barrage of 2 and 3 people because I don't know if I can handle it yet, especially being a dual agent too.
Yes, I love that you shared that because that is very normal of every single new agent. So here's a few things. Number one is the fastest way to get your first closing under your belt is the activities. The more, here's the thing, there's no secret sauce in real estate. There's no magic wand. Okay. It is literally the more people we connect with about real estate, the faster we're going to have our first closing. Now, along with that, we may be fearful of that yes. Like, oh my God, this is great. I might talk to all these people, but what if all these people want to buy and sell their house? Greatest problem you can have as an agent, because you have the support to walk you through every step of the way. Right?
That's why I'm on your calendar.
I know I'm so excited for our meeting. So you have support every step of the way. Also, here's the worst thing that happens. Worst thing. You talk to someone about buying a house. Oh, Bright MLS offers a lot of free webinars. Yes, oh my God, there are so many free trainings and webinars out there. It's insane. So the worst thing that happens is you start talking to 10 people a day, 50 people in a week, and all of a sudden you find one person wants to list a house and 2 people want to sell a house. Here's the great news about that. Number one, you're not helping all 3 of them in the exact same day, most likely. All right. Number 2 is if you talk to all those people today, it doesn't mean you have to meet with all of them tomorrow. You have time, you can plan like, you know what? Great. I definitely want to come out and help you sell your house and see how I can help you do that. How about this Thursday night? Gives you time to plan and call your coach, right? Hey, I love that you're looking to buy a house. Let's connect you with a lender. Gives you time and also make sure they're pre-approved because you don't want to be taking people out to see a house who's not pre-approved, right? But also buys you time to get what you need, right? And then think of the process as stepping stones. You're not going to go from, oh my God, I have Donna, this brand new buyer today, to she's buying a house in 1 hour, right? It's going to be, here's the first step with Donna. Here's the next step with Donna, right? It is literally, it's like a big conveyor belt that's walking it. That's just, okay, let's take this step by step. Here's the great thing. When you have your first closing, so I love doing puzzles. It's a little fact about me. Love puzzles. Behind me on my table, you can't see it because this is a fake background, although I wish it was real because that'd be awesome. Here, you know what? At the end of this, we're going to all go to the beach together right now. Let's all go to the beach. There we go. Now we're on the beach. So behind me at the beach, I have a 3,000 piece puzzle sitting on my table. Now, when I dump out that puzzle, first I have to find all, I don't have to, but I like to find all the ends. So in real estate, you get into real estate and you just dump, people just dump 3,000 pieces out in front of you. And you're like, what do I do with this? It is drinking from a fire hose. And it will feel that way for every single agent until you have your first closing. When you have your first closing, it's like that missing piece. You get all the puzzle pieces together and then you're like, where's that last piece? Right? For me, my cat probably took it and brought it somewhere. Right? So all of a sudden you find that last piece, but that last piece cannot be found until you have a closing. So all of you perfectionists on this Zoom right now, I'm going to tell you this, your perfectionist side will be great when it deals with contracts and writing things, but it's going to get in your way. Your perfectionist side is going to get in your way because you're going to want to know everything and be perfect. And for those agents who have been in real estate over 2 years on this call, is there such thing as perfect? Oh, Donna, you know I'm looking at you.
No, because the worst thing is
No.
because the worst thing is you have a couple of transactions, like even once you get those 3 under contract, anything can happen.
Yeah. Anything. You have no idea. We're dealing with people, we're dealing with houses, we're dealing with personalities. There is so much, right? I always say to agents when their first deal falls through, welcome to real estate. It's going to happen to all of you and it's okay. It is okay. Just know that when it happens, I hope it's not going to happen soon. I want all of you to have a successful first deal, but when it does happen, not if, okay? When it happens, I want you to hear that little Ilana voice in your shoulder and your ear going, oh, welcome to real estate. It's okay. Because it's going to happen to all of us. So, Tia, I'm so excited to meet with you.
Can I ask a question?
Absolutely.
So we're brand new, a couple months in, and we're in the Keller Williams Realty Center, Columbia. And we've had a lot of great teachers on this Ignite series, yourself included. One of my favorites was Tyrone from last week. I think it was
He's amazing.
Yeah, he's pretty awesome. So there's all these awesome trainers and coaches and people, and I hear a lot of people talking about, we're all drinking from fire hoses, the newbies here, and got all the Ignite training is great, but the thing I'm a little bit concerned about is our particular realty center, unless we haven't asked the right questions of the right people, which may be the case, there doesn't appear to be a concrete path for finding a quote unquote coach or mentor. And so in that example that you gave of, you make 50 calls and all of a sudden you have a listing appointment, or you have a buyer's agent opportunity that drops into your lap. We literally don't have a coach at this point. What is your advice to the people on this call for that are seeking or think that they would be better off with a coach or a mentor? And if I might add to that, what would you say is the difference between a coach and a mentor, if there is one?
Yeah, so it's a really good question. So I'm going to give you a few answers to it. Number one is, one piece of advice I have is, number one, go to leadership and say, hey, when I have, I'm nervous to get deals because I want some guidance. I want some support. Are there any agents that you recommend me reaching out to for maybe some extra guidance? Right? They may have some agents that they can think of and get you connected with if there's no coach on site. The second thing is, honestly, the second thing is you could hire a coach. It does cost low money sometimes. Usually it's based on closings, not upfront money, depending on who you hire, right? So like I pay for a coach. So you could hire an outside coach.
Are you talking about a coach outside of your realty center potentially?
Yeah. The third part of that is go to the market center, be there, show up for trainings in person, show up in the market center, randomly during one weekday and just kind of walk around and introduce yourself to agents, right? Just be like, hey, I'm, if you see it, just introduce, hey, I'm brand new, want to introduce myself, any guidance, any support, any words of wisdom you have for me. See how the interaction goes. Based on that interaction, be like, listen, I'm looking for some extra help. Is that something that you could provide? Here's the thing, they might say, yes, I have time. And they might say, no, I don't have time. But if you don't ask, the answer is always no.
Right.
By the way, same thing with real estate. If you never ask people if they have a real estate need or if they have real estate goals, the answer is always no. You have to ask the question. Okay. And then
Thank you.
to answer your other question, mentorship and coaching, they vary greatly. Mentors are typically a active, busy agent who is there to kind of answer your questions. Maybe you get to shout at them a little bit. They all work a little bit differently. So it's hard for me to say, here's what they do, because they work a little bit differently. Coaches, I always consider them kind of like again, sports analogy. So, you have the owners of a sports team where they sit in the skybox, right? And they just want to make money off of the team and all that good stuff. And then you have the coaches, and the coaches are on the field telling the players how to pivot their foot a certain way or how to block a certain way. Getting into soccer analogies now. Right. So they're actually on the field with the agent telling them, all right, Tia, here's exactly what I want you to do over the next 5 days to take the first step, which is, by the way, what she's going to hear from me this week. Right. So it's a very roadmap type way. Again, it depends on each person and what you feel you need to be successful. There's no right or wrong in any of it. The right or wrong comes from this screen right here. If you are not connecting with people. Now, if you haven't worked your way up to connecting with 10 people a day, meaning conversations. Now, conversations in my book is voice to voice, text to text, or DM to DM, not email. Right? So if I send a DM, yep, I'm old school on Facebook. So if I send a DM right now to Carol on here, and she's a friend on Facebook, and I'm like, hey, Carol, I'm reaching out to everybody I know in my social media, friends and family, because I'm working on my real estate goals for the year, and I want to see if there's any real estate needs you have that I can help with. Now, if she responds back to me, I just had a conversation. Now, she might respond back saying, no, I can't think of anything, right? But what we did there is we planted a seed. So now Carol is thinking of me when she thinks of real estate for the next 2 weeks. Everybody after 2 weeks forgets we're in real estate, by the way, just so you know. Even your close friends and family. And there's handwritten notes. It is a lost art. Anybody ever get a birthday card in the mail? Might have been a while ago, or like a Christmas card. Right?
But we all
I
should.
got one from my grandparents last year.
Okay, how does that make you feel? Like when you get a card in the mail that's not a bill, how does it make you feel?
Special.
Right? Special. So the agents who actually take time and write the notes to people, wow, thanks so much for connecting with me. Oh, I loved our conversation today. I'm so excited about, and it doesn't have to be real about real estate, right? I'm so excited about our conversation we had today. I really, really appreciate X, Y, and Z. I just want to write you this little note to say that. Right? It stands out. It shows truly that we care. Right? It means something. The bottom one, previewing homes. I know you've heard this throughout Ignite, but I am going to be a broken record because repetition is key in our business. Practice makes permanent. Not perfect, there's no such thing. When you go and you preview 10 homes a week, go to open houses, set up showings for yourself, practice with Central Lock, right? What you're doing there is you are mastering the market, right? If you preview 10 a week, that's 40 a month. You know this market inside and out. So then you're going to feel more confident talking to buyers and sellers just by doing that one activity. All right, so I'm going to stop it there. So we're going to take 5 minutes. We're going to do an activity right now to close out the night. We're going to take 5 minutes, do an activity, then we're going to come back, talk about the activity, and wrap it up. You guys ready for the activity? It's going to be super easy. You're either going to text, or you can jump on Instagram or Facebook, whichever you fancy. So you're going to text or DM as many people as you can in 5 minutes about real estate. Now, here's an example of what that might sound like. Okay, so let's say, for example, I am texting Donna, and Donna is a friend of my phone, and maybe we haven't talked in a little while. My text will be like, hey, Donna, oh my God, it's been forever. How have you been? Because I actually care, right? I'm in a class right now about, I don't know if you've seen, I'm in real estate. Reaching out to every single person I know. Are there any real estate needs this year in 2022 I can help you with? By the way, nothing bad will happen. You may get text back saying no, but that just means they don't have a real estate need this year. You guys ready?
Give us good information about even using the QR code, like when we're out and connecting with people as a way to do that too. And that has been helpful. I actually did that, like creating the QR code, and it does work for talking to people when you're out and having them scan your phone with your business website.
Yes. Don't let me forget when we come back from this 5-minute activity to tell you the reverse of that.
Okay.
Can you repeat the actual question?
So what we were talking about is a QR code so people can scan. It's a virtual business card, basically. When we come back from this activity that we're about to do, which is you're going to text or jump on Facebook and Instagram and DM, not comment, okay, private message people to connect with them and ask them if they have any real estate needs you can help them with in 2022, or real estate goals. That's always a fun phrase. Hey, Danielle, any real estate goals that you have this year I can help with? Even if it's finding like a painter or roofer or something, like I want to be a support for you. That might be my message. Something real estate related. If you're brand spanking new, got licensed like a day ago, your message may be, hey, I'm reaching out to everybody, exciting news. I just got in real estate, smiley face, emoji, right? That counts too. All right, you guys ready? We are 7:48. We're gonna go till 7:53 and then come back. And let's see who can text and DM the most people. And go. I will stay on here, so if you have questions, feel free to put it in the chat box. All right, let's come back together. So let's hear from some of you. If you can use the raise hand thing at the bottom so we're not talking all over each other, that'd be great. How was that? Success stories. How do you feel? Any of the questions that I just asked?
I'm on a roll. I don't want to stop. I'm going to keep it going till tomorrow.
I love, love, love that. Who just said that?
Natasha from Columbia.
Okay. So Natasha, I'll share this story with you. So there was an agent I worked with a few years ago, and she was so afraid of talking to people on the phone and just reaching out. Like she had such a fear of it. And I was like, okay, we're going to rip off the Band-Aid right now. Nothing bad will happen. I promise. I've worked with enough agents to know nothing bad will happen. And I was like, do you trust me? She's like, yes, I trust you. I said, okay, I want you to, she was big on Facebook. I was like, I want you to DM so many people that Facebook kicks you out for 24 hours, which I think back then was 50 people, but now, by the way, it's like 25 people. I know, because I got kicked out recently, thinking it was 50 still. So she went and copy pasted 50 some people in one day, right? Which, by the way, only took her about an hour and a half of work. By the very next day, she had 3 buyers and 1 potential listing, and a great bunch of follow-up people. So yes, please keep this going tomorrow. All right, what else? Oh, Donna, I love that it made you actually message a few people that you need to connect with. Right? Here's the thing. If you haven't connected with people on your phone anytime this year, even just to check in and see how they're doing in life, do that, right? Spend the month of March start with A, because our phone is alphabetized in contacts. Start with A, work your way to Z. If you have 400 plus people on your phone, it's going to take you probably March to May, or maybe March to April, depending on how many you do a day. But maybe your first connection is just to reach out and see how they are, right? It's called a care call. Check in on them, touch base. How have they been doing? How's their family? What's happening in their life? Maybe you don't bring up real estate for another call or another text in the future. That's okay, right? Because you're starting communication, but you're also showing you care. All right, another success story. Let's hear it. I know there's some out there. Anybody? Was that an easy activity? Okay, I see a few head nods. So I'll take the head nods as a yes. I'm going to take the other people as they're either super into this whole thing and they're like, I'm not getting on Zoom. I'm here texting. Okay. I'm just going to pretend that's happening right now. All you have to do is that every day, 5 days a week, or if you work a full-time job, maybe Saturday, you just do it for 4 hours and make your Saturday your big day, right? If you do that and you get the connection, meaning they respond back to you as well, right? And you have 50 a week. Let's just start with 25 a week. If you're not getting that many, start with 25 a week. You can't have less than that though. If you have less than 25 connections a week, you will not have a closing. You may have something fall in your lap with a family member, but you cannot be successful in real estate with less than 25 connections a week. It is impossible. We're in a numbers world. All right.
Okay, I have a question.
Sure.
You said you can't be successful in real estate without 25 contacts a week.
Minimum.
Minimum. And I know they covered that in a class like early on, but I was out of town. So can you just give me 4 different places I can get these 25 contacts, please?
So number one, your phone is the number one source. Okay. We all have people in it. So just dialing, texting, and reaching out to them to connect with them is number one. Referrals is the greatest and smartest business an agent can build. Referrals meaning based on people we know, friends and family, referring us to friends and family they know. Another source is social media. If you're on Instagram, if you're on Facebook, use it, right? Provide value, touch base with people, check on people, wish people happy birthdays, actually communicate with people through social media, not just about real estate, but just in general. Real estate should come up in the conversation at some point though. Honestly, a third place, if you have a hobby or something you absolutely love doing, turn it into a real estate lead generation source. So for example, there's an agent that I work with who she loves to run. She's part of all these running groups. Good for her. That is not me. So she's part of all these running groups. So I said, okay, what if during all these running groups, you set a goal that each week you connect with 5 new people as you're running? You already have the same hobby, so you know you have a bond there. You know there's automatic rapport, but find out, where do they live? Are they local? What type of running groups are they part of? Maybe they are, connect with them on a personal basis. It will naturally lead to them asking, what do you do? And when someone asks you that, you always lead with real estate. Always, if you have another job, do not talk about it. Always lead with real estate. I don't know how many I just gave, but was that helpful?
Very, but it was also like, oh, but it was very helpful.
Here's the thing. I did put my email in the chat box. There is a document that I really like called 50 Different Ways to Lead Generate. If you send me an email, I will send you that document, but you just have to send me an email so I remember and know who to send it to. The only thing I ask is, if I send you 50 different ways to lead generate, you only pick no more than 3, because you cannot master and be successful with more than 3. We just spread ourselves too thin. Was that helpful? Okay, good. That's all I strive for. All right, let me hear a takeaway about the class. We talked all about money tonight. Let me hear an aha from somebody. By the way, an aha means agents helping agents. Tia.
Have to work much harder. Much harder. The contacts, the leads, everything, but it's make a lot more like outreach in general, try to close deals and not wait, but just get on it.
Just get, yes. And when we meet, that's where I come into play. I'm gonna help you with that, with the first steps. Yep.
All right.
But we're gonna work smarter and harder. So, you know. All right, let me hear another one. One more for the night.
I think the aha for me is that, maybe hopefully for the group, is that this is a business and we're the CEOs of the business, and we have to manage our money very carefully, and we can't just think in terms of, oh, I got a commission check, yay. I doubt if there's going to be many people going out and buying Range Rovers, but I think it's really sobering and helpful to put it in the perspective of, hey, you have taxes to pay, you have business expenses, you have, the company dollar and the royalty to take into account and so forth. So I think it helped me, and I think it probably helped a lot of other people to get the big picture on, this is something that involves cash inflows and unfortunately cash outflows. And if you really want to succeed, you cannot forget about the expense side of the equation.
I love that. Absolutely love it. That's a great way to close out tonight. By the way, before you jump off, go to the chat box. I actually just put the 50 different ways to lead generate in there. Just know there's a lot of different options in there. Do not select more than 3. I highly recommend just starting with 1 or 2. There's also different things that are not in there. So if you're big on social media, that is a huge one nowadays to tap into. If you haven't already, please take out your camera on your phone to hold up to the screen, and it will give you the little QR code, which will give you a link on your phone you can click on to go through a survey. I will tell you this on a personal note. I am working towards becoming a Keller Williams University National Certified Trainer throughout the international service of Keller Williams. And I can't do it without 300 surveys. So please, 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 I would love it if you scan this, put my name in, which is on my little picture there, starts with an I-L-A-N-A, to complete a survey. That's also how I learned to get better. And they are anonymous, so I won't see your name.
Is Keller Williams Legacy 960?
Yes.
Okay.
Yep. Our market center is 960.
That's a good guess.
That was a good guess. All right, I'm going to leave this up here for another minute. Are there any questions? We are done for tonight. Thank you so much. I love that you guys are, here's the thing, the first step of owning your business is showing up. And to each of you who are showing up to these classes after probably a really long day at work and maybe having to make dinner really fast to jump on this at night and just put a lot of time in, that right there shows that you want it. Just doing that step is when people say, what's a success from last week? Say, I showed up. That's a success. You showing up tonight is the first step. So thank you, truly.